Hello everyone, thanks for joining us on this Saturday morning and welcome to this educational presentation of buy, sell, or hold. Well, today I'm going to share with you a tool that will tell you what to do automatically in seconds. And the beauty of this is that you'll be able to start using this as early as Monday if you'd like. But before we begin today's presentation, I'd like to start off by sharing with you some statistics in order to give you a better idea of what trading is all about. Because the facts are 80% of all traders lose money. And when we say lose money, we don't mean that you'll go into a drawdown, which is meaning some type of slump, and you'll have a sustained series of losses. We really mean 80% means the stats show that these traders will lose all of their nest egg that they put aside for trading. The facts also state that 15% of all traders will ultimately break even, and that's really not that bad in today's markets. Being able to not lose anything is actually something that you've gone on to the second level. But after you've really worked hard and studied and put a lot of effort and determination into trading, you really have nothing to show for it. You're basically just trading water. So 15% of all traders will just break even. This means that only 5% of all traders are consistently profitable. So we roughly have about 100 people in today's audience listening to me speak today. This means that basically, if we look at these stats, only 5 of you will be consistently profitable. The rest of you will fall into those other categories. And if we want to see what those other categories look like, we can take a look at this pie chart here. That large section in red represents the 80% of all traders that will ultimately fail. That slightly bigger piece there than the green piece, but the blue piece will represent the traders breaking even, and that small green sliver there represents the percentage of traders that will ultimately be consistent or profitable. Okay, so we have to ask ourselves, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? So in other words, are they trading a master system that nobody knows about? Are they in possession of some indicator that probably costs tons and tons of money that helps them to be consistently profitable? Or do they have some access to information that no one else has? Well, it really isn't as difficult as that. In fact, it's actually very simple. These traders in the 5% are consistently on the right side of the market. It's as easy as that. In other words, they're not trying to buck the trend. They're not trying to swim upstream. They're not trying to pick a top or a bottom, which is ultimately basically saying, this is how far the market will go up, I have decided, or I've decided that this is how far it will go down. They're not looking at that. They're on the right side. They're basically in sync with the market. So today's presentation is highlighted today because we want to get you in sync with the overall trend. And I'll show you this simple tool that can do it automatically in seconds. So you won't really have to sit there and go, boy, I went to this chat room and they said I should buy something. I don't feel too comfortable about that, but I guess they know what they're doing, so I guess I should buy. Because this is the way most traders trade, and this is why most traders fall into that 80 percentile where they ultimately give everything away. This is why I teamed up with ProTrader Strategies and put together Specialist Trading. About 8 years ago, I teamed up with them and we developed Specialist Trading, where all I do is teach and mentor students around the world in over 110 countries and in virtually every state in the United States, all the things I've accumulated in my trading career. Now, I've been trading for 41 years now. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we came up with the name Specialist Trading. Now, specialist just means that you're not any more special than anyone. It just means that if you wanted to buy or sell a particular stock, say you called your broker up and said, I wanted to buy a couple of hundred shares of IBM, your broker would call the floor trader on the floor, and then he would walk up to the trader who specialized in making a market in that particular stock, in this case, IBM. So I did that. I actually made markets in IBM. I did that during the crash of 1987 and the bull market that followed. I've traded just about every environment you can think of. If you think you've seen straight down markets, I've seen them as well. I've traded through them and made markets in them. I've seen straight up markets. I've also traded just about every technique or system you can think of. So in my 41 years of trading, I know what works in terms of consistency and I know what doesn't. So why would you want to waste your time going through all these years, maybe decades of trying to learn how to trade when I can shorten your learning curve for you and show you what really works over time and what really doesn't? This, once again, is what we do at Specialist Trading and Pro Trader Strategies. Now, today I have a great Saturday morning educational presentation for you and sharing with you this tool that will automatically tell you whether you should be buying, holding, or selling. But before we begin, as always, we're first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying this specific tool, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our required disclaimer, I would also like to take this time to invite you to follow us on Twitter. I know a lot of you have done so already, but there are still some of you I see in this audience that haven't followed us or that are new to my presentations. So there's our handle. You may want to copy that down because I post different information on a daily basis. It's all educational and it's all there designed to help elevate your trading. So feel free to follow us on Twitter. Now, as I stated in the very opening statement here, we are different from most companies in the fact that we are strictly an educational company. This is an educational presentation. We're not here promising the best system that never loses money. We're not here telling you what the perfect market is, that you should be trading only this market. Or we're not here to tell you this is the perfect time frame. This is the only time frame you should ever be trading. We don't believe in that. In fact, we encourage you to explore and find what's right for you. And that, in my opinion, is the only way one becomes a consistent trader, not by mimicking or following someone else's trading plan. In fact, that's a recipe for a disaster. That's why we don't, at Specialist Trading and Pro Trader Strategies, we don't have chat rooms or trading rooms because they turn the trader into a crutch. In other words, you start to think, well, I'm supposed to be trading like that, I guess. I guess I should enter right there at the same spot, or my stop should be at the same spot. So this is why, another reason why most traders fail. You're taking yourself out of the game and mimicking someone else's trading, either through a master system or listening to them on TV and following what they buy or sell. So what we provide is sound fundamental education that has stood the test of time. We work with you and mentor you in our courses, and then give you a series of different variables and options for entries, for exits, for stop placement, and then let you decide, because that's how you're going to become consistent. Trust me, I've realized this through 40 years of trading that no two traders should ever trade alike. So as you can see here, my goal is not to trade for you. A good mentor does not trade for you. He teaches you how to trade. So my goal is to teach you how to trade with a specialist edge. This is the same edge that turned my trading around some 41 years ago. Hopefully it will be able to do the same thing for you. So now, since we are strictly an educational company, that's our only purpose, to educate you so that you can make your own decisions. I do want to take your questions, but if you're new to my webinars, you know that I like to wait till the very end of the class to answer any questions, because if we stop every slide, we'll be here for a good 3 or 4 hours, and I don't want to take all of your Saturday morning up. So if you have a question, write it down. I promise I'll get to it at the very end of today's class, probably in the next half hour, and then I will spend the last 10-15 minutes for any questions you may have. Okay, so if you happen to join us, please wait till the very end. Now, if you're having technical difficulties, if you can't see or hear the screen or hear my voice, don't worry. We will furnish everyone with a link to this recording. Okay, so all of our presentations are recorded. All right, so let's begin. And remember, everything we're going to be showing you today is going to be generated by using our new platform. This is the PTS Primo Charting Platform, the platform that teaches traders how to listen to the market, because that's really what it's all about. So all the examples, everything I'm going to be sharing with you today have been generated on our new platform that I developed with Pro Trader Strategies. Okay, so let me start by asking you a question. What if there were a tool that was automatically designed to put you on the right side of the market? So in other words, you would never have to ask, gosh, should I buy? Should I sell? Should I hold? Should I be on the sidelines? You know, I'm not sure about these signals I'm getting from my system, and I'm not sure about what some guy said, but I guess they know better than I do, right? Well, what if there were a tool that could put you on the right side? Well, there is, and it's called the buy-sell line. This is a tool that I've stated, I've had presentations before about this. If you've seen me in the past speak about it, if I were stranded on a deserted island and I could only trade with one tool, it would be this, because this is the cornerstone. This is the foundation of all of our methods. And it doesn't matter, even though we're going to have a bias in showing you stocks today, it would make no difference if you traded the E-mini on a 1,000 tick bar chart. Or it would make no difference if you traded Bitcoin, or it would make no difference if you traded weekly bars of the currency pairs of the forex market. It makes no difference. But the buy-sell line is something that's so important because you can apply it to any market, any time frame, and any direction. So what exactly is the buy-sell line? It's simple. It's the 50-period simple moving average. That's all it is. You simply have to apply a 50-period simple moving average to each and every one of your charts. So how do we use this though? How does it work? In order to use the buy-sell line properly, all you have to do is ask yourself this question before each trade, but you must ask yourself this: where is price in relation to that buy-sell line? Okay, I'm going to say that again. In fact, you may want to write that down and copy it, put it on a post-it, and put it on your screen there, because it's so important. Where is price in relation to the buy-sell line? Because once you ask yourself that, prior to pulling the trigger, you'll only come up with two possible scenarios. If price is above, well then you're only going to have a buyer's bias, okay? You're only going to be looking for buy setups. And conversely, if price is below, you're only going to be looking for sell setups. I know it sounds too simple. I know when I was first taught this 40 years ago, I thought this is ridiculous. It can't be this easy, something for getting me on the right side of the overall trend. But please remember, this is not a system. This is not a trading strategy. Simply because price is above or crosses above the 50-period moving average to the upside doesn't mean you buy at the market. Or if it's been above and then crosses and closes below, doesn't mean you sell at the market. What it means is that it's telling you what bias you should have. Should you be looking at the market as a bullish perspective, or you should be looking at the market with a bearish perspective? That's all. But that's half the battle, because now you know whether you should be a buyer, a seller, or on the sidelines, simply holding on. So let's look at this example. This is a up-to-date weekly chart of the spiders. As you can see, we've been going pretty much straight up since January of 2016. Okay, just a couple of years. All right. Someone looking at this will say, "Well, sure, Steve. It's easy to see that we've been in an uptrend. I mean, you know, the market has just continued to go higher and higher and higher for the last 2 years. But I want to know when something is just going to start to go up in an uptrend. I mean, how would I have known that this was going to go up this high?" Well, remember, the buy-sell line does not predict how high or how low something will go. It just simply is telling you at the moment whether you should be long or short. Now, remember, our rule is to apply a 50-period moving average. So once we apply that, we ask ourselves, where is price in relation to the buy-sell line? Okay, it's either going to be below or it's going to be above. As you can see, it has been above going all the way back to January 2016. So remember, the buy-sell line is not a predictive tool. It could never have predicted how high, or never does predict how high the market will go. But you would have known in 2016 on a weekly time frame that you should only be looking at the market from a buyer's perspective. Had you done the opposite and looked at the market from a seller's perspective, look how much money you would have lost, okay? Now this works in the opposite direction. Here's a weekly chart of GE. Obviously, looking back at hindsight, this has been going straight down once again for roughly about 2 years. Someone looking at this would say, well, yeah, easy to see now, Steve. This is the current chart coming into this last week in April. But I would have wanted to know well in advance, somewhere up here, to get out of this stock, because my portfolio manager told me to buy this. This was a good long-term investment. How could I have known not to be buying this? Well, it's as simple as applying the buy-sell line, okay? The 50-period moving average. And then you ask yourself, the first thing you do is ask yourself, where is price in relation to that buy-sell line? As you can see, right here at this point, this was in February 2017, over a year ago, price had consecutive closes below the 50 period. So what was the market telling you? Not some guy on TV saying that, oh, this is tremendously oversold, or the earnings are going to be great, or the company is projected to do so well over the next decade. Forget about that, because trust me, I tried using that 40 years ago and it didn't help me. So once I started listening to the market, I said, okay, well, where is price in relation to this buy-sell line? Well, price is below. So that I automatically knew if I were long this, I could either sell at the market and get out, or I could raise my stop up very tightly, because sometimes we'll come below here for 3 or 4 bars and then bounce back up. So maybe I could put a stop in very tightly that if it went lower, I'm going to get out of this. And that would have been a great idea because look what happened over this, next year and a half. The stock basically has not stopped going down. All right. So I don't care what some, money manager says. I don't care what some guy on TV says. I don't care what someone says in a chat room. The buy sell line is the simplest and cheapest tool you can use to get you in sync with the overall trend. Let's say someone had advised you in February of 2017 to buy this stock. Well, you could have done this simple homework on your own and said, there's no way I'm going to buy this. And they would have said, well, why? And you would have been able to tell them, well, it's below the buy-sell line. And they would have said, the buy-sell line, what is that? But you could have come back to them a year and a half later and shown them, see how well the buy-sell line works. It was telling me that the market wanted to go lower. Now, those are very simple, easy examples. Sometimes it gets a little more complicated, so we have to, use a little common sense, and we have to use some edges here, and I can show you what they are. For example, in this older chart of CREE, we're kind of going sideways here. There's not really much direction, but we apply the buy-sell line, and we see here for the first portion of this chart, we were below. So remember, this does not mean you sell at the market. It means that you either want to be on the sidelines, you don't want to be invested in this or trading this to the long side. You should only be looking for sell opportunities. Well, let's say you don't get any sell opportunities, but at least you're not losing any money. But at this point, we start to hover above and below. And at this point, we actually have some consecutive closes. So here's the rule of thumb. Look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established. Because just because we close one day above or one day below or one tick above, one tick below, doesn't mean that, oh, well, now we've automatically changed trends. You have to give it a little bit more breathing room, okay? So look for at least 3 to 5 bars. This is a rule of thumb. These are not systems. This is not a trading strategy. It's just ways to filter, and so that can give you higher levels of consistency. So as we see here, we started to flirt with touching the buy-sell line, went back below, but now here we are above. And how many days did we close above? We had a total of 5 days closing above the buy-sell line. So that's enough to tell us that we should not be looking at this stock from a seller's point of view. We should be looking at it from a buyer's point of view. Now, regardless of what type of strategy or system you have, you only want to be looking at this stock from a buyer's perspective. So you need to have a little structure. Obviously, you can't just buy at the market. But let's say your strategy generated a buy signal. Well, look how well that would have worked. Now, someone who doesn't know about this rule would have said, well, how did you know this was going to go up? And now, obviously, we didn't know it was going to go up, but we knew we should only be looking at this from a buyer's perspective. That's how powerful this tool is. That's why I said, if I could only use one tool for my trading, it would be this tool. Now let's look at this chart, this older chart of UA, okay? Under Armour has been going down for a while. All right, now as you can see here, here is a negative bias, but how would we have known to be negative? I mean, obviously it's easy to know this once we get down to these levels, but how about higher? Well, we apply the buy-sell line. And look how the buy-sell line was telling us well in advance that we should not be long this stock. Why? Because price was below. So remember the title of this presentation, buy, sell, or hold? Well, what was this telling you? It was telling you either to sell, to go short, look for shorting opportunities, or to be on the sidelines. But it wasn't telling you to buy. It wasn't telling you to hold your position because price was below, as you can see right there. All right, let's look at this example in Merck, MRK. This is where things get a little cloudy sometimes, and we're talking about consistency. Remember, I said in the beginning of the presentation, we're not here to sell you a master system for $10,000 that never loses. We don't believe in that. And if anyone ever tells you that, you should really take that with a grain of salt, because I've been trading over 4 decades now, and some of the best traders I know still lose money. So there's nothing wrong with that. You just want a technique or a method that is consistent, that is able to have a 2-step forward, 1-step back approach. All right. So let's look at this example in Merck. As we can see here, we are now above the buy-sell line. We had a total of 5 closes. So let's say your system, your technique got you in right here, all right? So you have a couple of days of profit, but then things go against you and you lose money, you get stopped out. Or let's say your system tells you to hold on. So you've been holding on and you're losing, you got long here, you're losing this amount. So this is a pretty substantial loss. But then what happens later on? We have roughly 9 closes below. So even though Merck hasn't really fallen out of bed, it's giving you a tremendous warning. It's screaming out that you should most likely be out of this and look for a selling opportunity. Now, I can see here that there are a number of selling opportunities using the techniques. Just off this example alone, in these 9 bars here, there were roughly about 3 selling opportunities using our strategies or methods. So even though you took the loss in the buy setup on the first one, well, Merck would have made it back on the 8-point drop it had the next week. So that's what we mean by consistency. No method works 100% of the time, but you want a method that's able to get you back on the right side so that you can recoup those losses, hopefully sooner than better. Now, I know you're probably saying, okay, this looks fine. I'm sure you're cherry picking the best examples, but this is recent stuff. How about going back in the past? I really am not convinced how important this thing is. Okay, fair enough, because those are the exact same things I said to my mentors when they showed me this tool. Let's look at this chart of the Dow Jones Industrial Average. Okay, this is a chart of the Dow. We were going straight up, and then we've run into some trouble lately. So this is the Dow, but the only difference in this chart is that this is the Dow going back to October 1987. All right. A lot of you I know weren't even trading. Many of you probably weren't even born. But I was on the trading floor in October of 1987, the great crash of 87. Now let's apply the buy-sell line. Coming into that, as we see the market going higher, we were well above. And now we start to go into this flirting phase where we're flirting with being above and below. When the market does this, I don't care if you're looking at a 5-minute chart or a monthly chart or a daily chart here. When the market does this, it's showing you that there's indecision when it's oscillating above and below the 50. So do you want to be invested in anything where there's indecision, where the thing you're investing in doesn't know what it wants to do? No, that's a warning sign telling you that you should either raise your stops or get out completely, or start to think about trading in the other direction. Because as we can see here, we had a total of 3 closes below, and then we closed back above. Then it was followed a week later by about 10 closes below, but then we closed back above, and then followed another week later with 3 closes below. So this is the market screaming a red flag that it's maybe running out of gas. It could possibly be just building up some steam to make another run up. But you know what? It's telling you that this is something to take caution and that you should most likely be on the sidelines. And that would have been a great way of action, because we all know what happened after that. The crash of 87 that happened in the following weeks would be comparable to a one-day market drop of 4,000 points today. Imagine the Dow being down 4,000 points. So that's in one day how it would happen today. So do you think this tool could have helped you? Now this is going back to 1987. Let's look at another chart here. This is the spiders, all right? But the same thing is, though, this is a weekly chart of the spiders. We're above, and we're starting to flirt with being above and below the 50-period moving average. But once again, this is in January of 2008. You all remember what happened in 2008? Beginning of the Great Recession, right? And a very sustained bear market. What was the market telling us on this weekly chart of spiders? Well, once again, it's giving us some warning signs here, because we had 3 closes below, a couple of closes above, followed by some more closes below, and then 3 more closes below. That's the market telling you it's indecisive. It doesn't know what it wants to do. It's giving you a fair warning that, you may want to be out, because we may be running out of steam or possibly building up to make new highs. But until we have 3 to 5 consecutive closes above, you most likely should be out of this market. And that would have been a wise course of action, because that was the beginning of the 2008 financial crisis. And once we started to consistently be below the 50 period, look how well that tool could have helped you. Okay. Now, I have some homework for you. I told you this was an educational presentation. I have a homework assignment for you. Go back and research your last 10 to 20 trades. I can almost verify that your losses would have been due to the fact that you were out of sync with the buy-sell line. It's as simple as that. And I don't care if you say, well, Steve, I don't trade stocks. I trade 5-minute E-minis. Okay, so do I. All right, I still use the 50-period moving average. Or you say, well, Steve, I trade Bitcoin. I don't use that stuff. Why? our methods work just as well on Bitcoin, and we apply the 50-period moving average. There makes no difference what market, could be commodities, stocks, forex, it makes no difference, and makes no difference what time frame. This tool can be applied to all of them. Now here's the problem. Most students, when they go back and do the research and then they finally give into it, they say, okay, I'm grasping the concept, I think you're right. And then they fall in love with it. I know I did. But this is the first common pitfall, and I fell into this pitfall as well, is that you believe in it so strongly, and the 50-period moving average works for you, and you have it on all your screens, and then someone tells you about this great system or this great webinar you went to or this great guy who was on TV who calls the tops and bottoms perfectly. So you do a little research and you go, wow, this guy's not bad, or this system's not bad. And so guess what? After a while, you want to go to greener pastures. You forget all about the 50-period moving average, okay? That is something that's very common. This is why PTS Pro Trader Strategies and I developed the Fluid feature. This is something that helps you to be focused by using the 50-period moving average in a different category. So let me show you exactly what it is. First of all, the beauty of the Fluid buy-sell line is that it not only tells you the overall direction of the market you're trading, but it also tells you the momentum of that market as well. So here's what the Fluid feature is. As we look at this chart, this is a daily chart of GE now once again. Using our platform, it's as simple as this. You would simply click on in the upper green strategy tab here with all of our courses, all of our strategies, all of our techniques. You would click on buy-sell line. Once you do that, a drop-down menu appears, and all you have to do is click on 50-period simple moving average. But once again, that's what most students do in the beginning, and then they forget about it. They say, well, you know, I saw that guy, and he has this $5,000 system, but it made back all the money in 1 month, and it really calls the tops and bottoms, so they forget about it. So here's a way not to forget about it. Click on the Fluid feature instead, and once you do that, it will automatically change your screen from whatever color you have to our Fluid feature. Now this line is the buy-sell line. But how do we read this? Okay, well, we use that old sailor's adage. Red sky at morning, but this time we change it. Trader take warning, okay? So in other words, if you see price, as you see here, in the red zone, that's telling you, once again, that you should only look for shorting opportunities. Now, what if price crosses over and has consecutive closes in the blue area? Well, blue sky at night, trader's delight. That's when you want to buy. See how simple trading can be, and it's simple it is with this feature. You don't have to calculate anything, don't have to look at earnings. You don't have to figure out what someone said or some announcement, or it's just right here. You know instantly, automatically, especially with our Fluid feature, whether you should be long, short, or holding something, okay? And also, the extra added feature is that you can really see with clarity the slope of the buy-sell line. And why is this important? Because it's telling you the momentum, all right? It's telling you the strength, the current of the river. It's telling you how strong that current is. And that's where you get oftentimes the best setups. How about this example here? This is an HBQ. Okay, looking at hindsight, it's like, yeah, this is starting to go up, but how could I have known in advance that I should have been a buyer? Well, we click on the buy-sell line, and right here, weeks in advance, you would have seen that you have consecutive closes in the buy zone. Blue sky at night, trader's delight. Red sky at morning, trader take warning. So coming up until here, you would have only looked for sell signals. But once you had consecutive closes above, that's where you start to look at buy. And as you notice right here, you had this strong upward slope. That's where you have the highest probability for consistency, because the strong upward slope is telling you there is a lot of momentum in place. There's a lot of current in the river. So that's what you want. Those are where the high probability setups occur. All right, so let's go back and look at that 2008 example of the weekly chart of the spiders. Could the Fluid feature, which wasn't invented by myself and Pro Trader Strategies yet, but could it have helped us? Well, it could have given us an early warning as well, because once again, you'd click on buy sell line, click on Fluid, and it automatically changed from whatever color your screen is to the Fluid feature. Now you have a better idea of just how well or how poorly the market is performing. So just with the 50 period, you can't see it as much, but now you're starting to see that we're kind of dipping well below into this sell zone. So this would give you even more warning than just simply having a 50-period moving average up there. When you see all of this action, this is giving you a fair amount of warning. It's a red flag, and this was the beginning of the 2-year bear market. Now, a lot of people are always concerned with news, and I know you should be, because many times we're caught on the wrong side of the news event. There was a lot of news and earnings events, I believe, this last week that people were talking about, and a lot of people are always frightened to trade with news coming out because they feel, well, even though this tool maybe get me on the right side, if the earnings come out poorly or if something happens, that supersedes whatever is happening at the moment. And it could be correct. Sometimes it does happen. It's been my experience, though, that this tool in my own personal trading has put me on the right side even prior to news events. Let me share with you something that happened just this past week. Now, Yahoo Finance reported Snap shares in free fall, okay? Shares of Snap Inc., SNAP, have fallen to their lowest level ever on a disastrous quarterly earnings report, confirming investors' fears about a poorly received app redesign and the firm's weakening relationship with advisors. Snap stock closed down a whopping 21.9%, or just about 22% on Wednesday, okay? So, bad news. Here's the way most people will trade this. If you've already been an investor in Snap, if you're holding on to the position, this is where most people get out, because they say, boy, I've lost so much money on this. This was supposed to be the darling. This was supposed to be the new Facebook IPO. I've lost so much money on this. Why hold anymore? Time to just, take my losses, lick my wounds, and get out, all right? Well, sure, you don't want to be in something that's losing you money. But most traders will wait until an announcement like this. And this is the way we're always taught. Sell on bad news, buy on good news. And this is a chart of Snap, a current chart coming in this past week. This is where the news came out this past week. Is there any way the buy-sell line tool, the Fluid feature, could have helped us? We're not saying it gets out at the top, because remember, nothing is designed to get you out at the top or in at the bottom, but at least could have helped you if you were along this stock. Well, sure. Now that you've applied the buy-sell line, you see that prior to this month, what did we have here? We had consecutive closes, in fact, 5 closes below the buy-sell line. This is when the stock was trading roughly around 16. Now the stock has already dropped 6 points, or roughly about 25, 30%. So it's like, this could have helped you, at least said, you know what, we're in the sell zone now. I don't want to be long this anymore. I'm going to get out. Once we have consecutive closes back in the blue zone, then I'll get back in. And you see, this is how it can help you. It's not promising you to get you in at the bottom or out at the top. It's just getting you in sync with the overall trend. Now, this just happened this past week, and this is how this can help you, okay? Now, I want to share with you one last look here at our disclaimer, because I'm going to do something I have done before in the past. I don't do a lot, but I'm going to give you a chance to ask me what stock, and we're going to go on the platform and actually look in real time and see where these stocks are in relation to the Fluid feature of the buy-sell line, okay? So I'm going to show you a lot of performance results of your own stocks or that you're interested in, but please remember that this is strictly for educational purposes only, and that past performance is no guarantee of future performance, okay? So just let me toggle over here onto our platform. All right, now here is just a standard chart of Apple. And just let me show you how simple it is to apply. Now, this is a daily chart of Apple. All one would do would be simply to click on the buy-sell line, go to the Fluid feature, and that's how quickly and simple it is. Now, we realize that we had Apple has been oscillating above and below, so it's been very difficult to trade here if you are trading. What if you're an investor, though? What if you want to know the long term? Because most people don't really trade Apple. Most people have it in their portfolio. So you go to a higher time frame. So we see here that on a daily time frame, Apple just recently crossed over into the buy zone. Let's see what the higher time frame is telling us. And all you have to do is click up weekly, and guess what? Going back to August of 2016, almost 2 years ago, you see how, on an investor's point of view, it was telling us that you should be long. And remember on that daily chart where we had those strong sell-offs? Well, looking at a higher time frame, those sell-offs are right here, and they made no difference. On a weekly point, you should be looking for buy setups, and our methods do all that. All of our strategies can look for that. In fact, once again, just knowing the way our strategies work, I can see a number of buy setups here on a weekly chart. So it all depends what time frame you're looking at. Now, if you're really a long-term investor, well, you simply come up here and click on monthly. This is going back well before, 1989, and we can see going back, look how long we've been consistently above the buy-sell line. So it all depends on what time frame you're looking at, okay? But the buy-sell line makes no difference. Let's go back to a daily chart, and oops, let me just I think we crossed over into a different time frame. There we go. Okay, now let's look at the most recent areas of that chart. And let me open up the question and answer box. If you'd like me to just look at something that you're interested in, if you're just new to this concept and you'd like to see what it looks like, just go to the question and answer box. And once again, this is your chance to check out what you're looking for. Let me see, we have a couple of them here. There's NVDA, NVDA. Let's see. Okay, let me just close the question and answer box. It's kind of overlapping here. And we can see this is a daily bar chart. We'll just scroll out to get a little bit more time. And this, going back to the last week of March on a daily time frame, was telling you to be out of this market, okay? Or look for shorting opportunities. And there were a number of opportunities you could have short and take advantage of this. Now, here we have one close above the buy-sell line. Now, is this enough to tell you that you should be a buyer? No, because if you notice back here in advance, we had one close above here, and then we went back down. That's why we say the rule of thumb is you need at least 3 to 5 bars closing either above or below to tell you what the overall trend is. Now, if you see in that last daily bar chart of Apple, we just had 3 closes above. So most likely we're in an overall uptrend for a daily time frame. So that's what NVDA looks like on a daily basis. If you want to see what that looks like on a weekly basis, well, easy to say that we've been bullish this entire time. Let's go scrolling further. So remember, it all depends on what time frame you're looking at. If you go to smaller time frames, there'll be more and more whipsaws or ranges back and forth. But if you're an investor in this stock, well, what's the stock been telling you going back to 2016? It's telling you that you just want to buy it. There's no reason to be selling this at all, okay? So that's a weekly chart. Let's go back to the day, and I think someone else had example SWKS. Let's look at that. Okay, this is coming into this past week. Look at how this could have helped you right here. Right here, maybe a little lower, roughly around 99, you had consecutive closes below. Do you think this could have helped you if you exited this or looked for shorting opportunities? Because the market went from 99 all the way down to 85, okay? Now I can just see number. Here's a strategy 5 setup. Here's another strategy 5 sell setup. There were a number of selling opportunities using our techniques you could have taken advantage of. Now, is this setting up to go long? No, because we are still below the buy-sell line. So you do not want to be buying this according to the buy-sell line structure. Now, remember, you're free to do whatever you want, but we're just trying to show you techniques and tools that have generated high levels of consistency. And we have found in 41 years that if you're on the right side of the market, your consistency will be higher in your trading. So why try to pick tops and bottoms? Sure, they'll work every once in a while, but if you continue to do that over time, you won't have anything to show for it. But if you continue to trade in sync with the overall trend, you'll have a greater opportunity to have substantial consistency. So right now, SWKS, according to the buy-sell line, should be looked at from, on a daily point of view, should be only looked at from going short or out of the market entirely. If you want to see what it is in a higher time frame, well, the higher time frame is saying there's nothing wrong with being long this stock. So if you're trading and you want to get in and out in a matter of days or weeks, you should be looking for shorting opportunities. If you are an investor, if you're holding on from 6 months to maybe 2 to 3 years, you're long this stock. Now, I know a lot of traders always say, well, Steve, how can I be long if, how can I, isn't this supposed to be like, they're supposed to be in sync? So in other words, if we're in the blue zone above, don't I have to wait for it to go in the blue zone on the smaller time frame? Sure, you can if you want to. We don't require that. Our credo at Specialist Trading is to only trade the time frame you're interested in, and don't worry about other time frames. So when I trade, I only care about the signals that are generated on the time frame I'm trading. I don't care what the higher time frame is doing or the lower time frame. It makes absolutely no difference to me. And you say, well, why? I thought that's always the rule of thumb, that you have to get different time frames in sync. Once again, it's not required, because in my 41 years of trading, I have found no consistency in using that technique. If you feel you must, though, once again, go ahead. We're not here to trade for you. We're here to teach you sound fundamental techniques that have shown high levels of consistency in the past. So it's up to you if you'd like to do that, trade 2 time frames at a time. All right, let me open up the question and answer box, see if there's any more. Some people are saying, what about Facebook? Okay, let's look at Facebook here. Firstly, we'll take a weekly chart of Facebook. And you see how simple this is. This is in a matter of seconds. Looking at a weekly chart of Facebook, coming up here, well, we've had now 2 consecutive closes above. So now on a weekly time frame, it still hasn't guaranteed that we should be above, but as you can see here, we may be doing the same thing we did at this point. We came down, had a couple of closes below, 2 closes above, 2 closes below, but not until this point did we know that we had consecutive closes. So we may be doing the same thing here. Now, that's on a weekly basis. How about on a daily basis? Well, we are above. Whoops, I'm sorry. We kind of backtracked because we were looking at weekly charts. Well, we still are above. Now this, if you're a day trader, not day in terms of intraday, but just looking at daily bar charts, this has 1, 2, 3, 4, 5, 6, 7 consecutive closes above the buy-sell line. So from being out of the market from mid-March, now is the time to be in. But remember, this is not a system. So I'm not going to tell you just to buy at the market. You have to have some structure. You have to have a plan. This is just telling you that that plan should come from a buyer's perspective. You should in no way be thinking about selling right now. I know a lot of people may say, well, Steve, I mean, look how bad all we did was come back up and fill this gap. And look at this gap. We're most likely going to come all the way back down and fill it. That's what a lot of traders want to do. They want to try to buy at the very low and sell at the high. But according to the overall consistency, the overall trend is up right now on a daily chart of Facebook, okay? Now, I know a lot of people, once again, are thinking about news, talking about news. Let's look at another example here. Tesla came out with some terrible earnings, I believe, or how the company is doing. And looking at that on a daily basis, we see here that the buy-sell line was telling you to get out of this stock roughly about $330, way up here. We had consecutive closes below. We had 1 or 2 above, but then right back below. So right here at this little ledge at roughly 325 to 330, you should have been out. There's no reason you should be waiting for earnings or waiting for announcements or listening to what some guy is saying in a chat room. The market, through the buy-sell line, is telling you, be out of this stock. And look, you would have missed all this drop from 330 down to 240, roughly 80, 90 points. Now, we've had a very nice run up as of late. Should you be buying this? No, because we have to have confirmation that we have 3 to 5 closes above into the buy zone, the blue zone, and we haven't had that yet. So right now, all setups should be looked at from a negative bias, or else you should be on the sidelines. This is how simple it is. Trust me, you do this simple question every day by asking yourself, where is price in relation to the fluid buy-sell zone? And you'll increase your odds for consistency even more. Now, a number of students are always asking, can you use this on ETFs like for the market? Sure. Let's look at the diamonds. That represents the Dow Jones Industrial. That's the ETF or the stock that represents the Dow Jones Industrial Average. So if you look to see where the diamonds are in relation to the buy-sell line, wouldn't that kind of give you an idea of what the market's going to do? So we press up the diamonds, and we see here that coming into May, we are still in a bearish mode. We've been out of this market, if you were using daily bars, since actually early to mid-February. And probably a good idea, because every time we've bounced, we've come back down. So there isn't a lot of opportunity to make money on the upside. So far, we are still negative on this. This is a daily chart of the diamonds coming into this last week. So should you think the market is going to be positive? Are we in the beginning of a new bull market? A lot of people are saying, well, we've had terrible news, but we've withstood everything and we're starting to bounce. We had a really nice bounce on Friday, so I think we're going to be okay. Well, we may be, but we want more confirmation than that. We don't just want some guy on TV telling us that the market may be okay. We have to have 3 to 5 closes above. Now, this is if we're looking at the market on a relatively short-term time frame on daily bars. What if we want to go out a little more? If we want to really invest, well, let's go to a weekly chart of the diamonds, which is the Dow Jones. And what's the market telling us on a longer time frame? Well, we're just a little bit behind, but we go here. It's telling us we're okay still. Even though we've had this sell-off, we're still okay on a larger time frame. So you should still be looking for buy setups if you're a swing trader or a moderate investor. Now, what if you're a real long-term investor and you really want to know about the markets and see how well they're doing for your 5, 10, 20-year investments? Click on the monthly bars. And you think you're doing okay? Whoops, I think we should be fine. We just switched back to weekly. Let's go back to monthly. There you go. Okay, we'll scroll in. So looking back to 2012, 2013, we've been positive this entire time. This is the sell-off that has been happening for the last 3 to 4 months. Is there anything negative about that? No. Now, sure, there's a lot of ways to come down to the seller zone, but this is, it all depends on the time frame. This is long-term investing. This is not trading. You could have said the same thing here when we had this big sell-off here in 2015 and beginning of 2016. Those were all buying opportunities according to this time frame. So where the long-term time frame is saying we are extremely bullish on the market, we go to the regular time frame on a daily bar, and it's telling us, as we scroll up, that we're still in the negative zone. We have been since February, okay? So that's why we say at Specialist Trading, only trade the time frame you're interested in getting signals. So your signals depend on what type of trader you are. If you're an investor, you take your signals from a weekly or a monthly bar. If you're an intraday trader or daily bar trader, you take your signals from daily bars or hourly charts. But don't combine the two. There's no reason to, because you'll confuse yourself and you'll oftentimes miss a lot of setups by waiting for 2 different time frames to be in sync with each other, okay? Does that make sense? It's a question just to take it real quick. When investing, what time frame would you use to base your entry? Well, remember, if you're investing, I can't tell you, we're not an advisory service, but investing has to deal with higher time frames. So I wouldn't suggest looking at daily bars because investing means you're going to be in the market a lot longer, anywhere from 5 years to 10, 20 years. So for that instance, don't concern yourself with the daily noise of daily bars. You would either use weekly or monthly, okay? That's just a suggestion. It's not a recommendation or anything. Another question, Steve, if you catch a nice trend on the daily and then price crosses above the weekly, is that a sign that the trend will continue? No, not necessarily. Remember, we only care about the market time frame we're trading. That's all we're interested in. And so do you see how that will only serve to confuse you many times when you're waiting to get confirmation from a different time frame? So if you want to, if you've been taught that this is the way to trade, by all means, go ahead. But I think you'll find out after using this tool that there isn't a lot of consistency in it, okay? All right, we have one last request here. I'll take a view at it before we go into the question and answer portion, and that is on Netflix, okay? So let's look at Netflix right here. You simply punch it up on the daily chart, hit apply, and we can see that the other daily bars of Apple and the diamonds were negative. Facebook has been positive this entire time. Now, even though we had 1, 2 closes below, see we had another close above, another 2 below, we still remained above. Now here we have never gone below. We were very close to the sell zone, but we've never gone below. In fact, just off site, I can see a number of buy signals being generated in the last few weeks in Netflix. I can't tell you what the rules are, but I've been trading these for the last 4 decades. I know when I see a buy or sell signal. And since we're in the blue zone, I'm only looking for buy signals. And I've already seen 2 here within the last couple of weeks. So this is what we're talking about when we're trading. If you know what side to be on, you've automatically increased your odds for success. Now, if we're on the blue zone in the buy setup area on the weekly chart, on the daily chart, most likely it stands to reason that we're going to be there on the weekly chart as well, okay? And as you can see, we have been, and we remain on the blue side. So it all depends what type of trader you are. If you're an investor, well, you look at weekly or monthly bars. If you're a swing trader or day trader, you look at daily bars. If you're an intraday, well, we can do the same thing. Now, let's just say you're an intraday trader. Let's say we go to an hourly chart, okay? Well, the hourly chart really was negative this past week or so, and it just started to get positive. So now on the smaller time frame and an hourly time frame, we're starting to get positive in Netflix. So it all changes, but it all depends on what time frame. But this is how simple it is, and see how powerful this tool is. Okay? All right, let's go back to the presentation. And in closing, I just want to leave you with what my mentors taught me. And it took me a while to grasp this, but now this is, at the cornerstone of everything we do. The market is always telling you what it wants to do. All right? Not some guy in a chat room, not some earnings report, not some political announcement, but the market, the thing you're trading, the source of where you're making your money, that's telling you what it wants to do. So our job as traders is really simple. It's not to figure out what earnings are. It's not to figure out, what's going to be, the announcement or who the new CEO is or what kind of company direction this is going in. No, our job is simple. It's to listen, to find out what it wants to do. Does it want to go up? Does it want to go down? Does it want to go sideways? And then simply add some structure and jump on board. That's it. We don't have to worry. If you want to overcomplicate your trading and have sleepless nights, you can worry about earnings, or if you want to, you can worry about who's in office, or if you want to, you can worry about what's going on economically. Sure, but it's not in any way required. All you have to do is so much simpler to learn how to listen and then jump on board. All right, so let's recap. What did we teach you today? What did we share with you today? The buy-sell line, all right? This is the most important tool we have at Specialist Trading and the simplest tool because all it is the 50-period moving average. But you must do this in order to apply the buy-sell line properly, and that is ask yourself a question. I don't care what strategy you trade. I don't care if it's based off of some $10,000 system or if it's based off of the full moon. It makes no difference, but before you pull the trigger, when it generates a signal, ask yourself, where is price in relation to that buy-sell line? If price is above and you got a buy signal, well, good. You're in sync with the overall trend. But if you get a buy signal and you're in the reddish orange zone, sell zone, do not take it because over time you will not have consistency. The odds are against you that you will do well. And we show you how simple it is to apply this concept by using our new fluid feature, okay? This is something only available on our new platform. And people swear by it. We've gotten tremendous testimonials from people all around the world how they just love this feature because it makes it so simple. Now ask yourself, before you ask me questions, do you think this edge could have helped your trading this past year? All right, as I gave you that homework assignment, go back and look at your last 10 or 20 trades. I can almost guarantee you that you will be saying, yeah, boy, this could have really helped me. If anything, at the very least, it could have saved me a lot of money where I had on losing trades. Now, because you took time out of your Saturday morning, we're going to offer you a great, great discount. In fact, we're going to offer you our PTS Primo Charts, all right? This is the trading educational portal that teaches you how to listen to the market, something I'm sure most of you have never been taught before. I know I wasn't. I was always taught the same way, most likely as you were, to look at earnings, to look at what the institutions were doing, to look at volume. But this teaches you how to listen to the only thing you should be, and that's the market itself. Now we're going to offer you 30 days for only $7. This is our offer to you for all the Saturday attendees today. And this is a great offer because we're going to show you what's included in this. With our 30-day offer, you're going to get, obviously, the enhanced buy-sell line. You're going to get all the different categories, and there are more than the fluid feature. There's 2 or 3 others that you can use to apply for the buy-sell line. We're also going to throw in our top-bottom 25% tool. This is a great way to find out what the short term is. Now remember, the buy-sell line tells you the overall trend. But the top-bottom 25% technique will tell you many times an edge as to what the short-term trend is. And we're not stopping there. We're going to throw in 2 entry techniques. These are proprietary entry techniques that you can apply to any strategy, any system that will fine-tune your entries and show you high probability entry points. So if you're not happy with your current trading method and you feel it's getting you in too late or getting you in too early, these 2 techniques with a click of a button on our strategy tab will automatically show you where the high probability entry points are. All right. We're also going to be throwing in our signal scanner. All right. This is a great, great way to find out what these different categories are generating for the next day. For example, all you have to do is click on the scanner window. This will appear, this drop-down window. You click on load symbols, which we provide you with. We provide you with the Dow Jones 30 symbols, S&P, NASDAQ, top ETFs, strong stocks, Bitcoin, currency pairs, futures, and whatever list you decide to pick comes up automatically in a matter of seconds. Now you just click on scan, and in about 30 seconds, you'll see a series of either green or red horizontal bars. The green bars simply mean that that's a buy signal for the next day. The red bars mean a sell signal. It's that simple. Then you can simply click on those green or red bars, and it will automatically show you in a matter of seconds where the signals have been generated. So that is included. We're throwing that in as a bonus. We're also going to throw in over 90 technical indicators if you'd like to experiment with more different tools. And we realize that our platform has a technical bias, meaning that we like to look at a lot of technical information. But if you like to listen to news, if you like to learn about earnings, remember, we're not here to tell you how to trade. We're simply here to give you information. So we're going to provide you with free Bloomberg TV. It's as simple as one click away. You will get a media page, and you will be able to look and watch free Bloomberg TV with any news announcement, any earnings report, any economic announcement that comes out prior to the opening. You'll be able to see live while it's happening and right next to your charts. So that's included as well, okay? And lastly, this comes with personalized tech support. For any reason you can't load up a chart, or for any reason you can't get the Bloomberg TV up, or you don't know how, we will be there in a matter of moments to help you with it and resolve all your issues. Remember, this is all yours on the trading educational portal that teaches you how to listen. Everything I showed you today was generated using our new platform. And guess what? 30 days for only $7. That comes out to a little over 20 cents a day. Now, at the end of 30 days, you can decide whether to stay on with it or cancel, or you can decide to even get more strategies and methods, but it's entirely up to you, okay? So let me share with you exactly how to take advantage of this great opportunity. Contact Pro Trader Strategies. They're the ones I developed the platform with. You can email them, call them directly at area code 310-598-6677, or simply click on the link below at the bottom, and that will automatically take you to the $7 sign-up page, okay? Now, that link is not live. You'd have to copy and paste that onto your browser, but there is a live link in the chat box on the far right-hand corner of the GoToWebinar column. So it's all you have to do is click that on, okay? Remember, all this information for only $7, less than a quarter a day, all right, for 30 days. And you can decide after 30 days whether you want to stay with it or continue with the format. But it's roughly 41 years of trading knowledge that I've accumulated, all put onto one portal. So it's a great way to get your trading back in sync. Now I'm going to open up the question and answer box one last time, and let's see here. Question, Mercy. Hi, Mercy. She says, when is the course going to start? I'm not sure what course you're talking about, Mercy. We have a number of courses. Oh, if you're talking about, we have something that's entirely separate from this. This is a course we have, which is called our Master Series. Then we're starting the Master Series this Friday. I believe this Friday at 10 a.m. PST, Pacific Standard Time. For more information, though, contact Pro Trader Strategies because they can give you more information on that. Question, after 30 days, how much? After 30 days, the price is $97 a month, okay? Now, if you look at most charting platforms, I mean, I've purchased platforms before we devised the PTS Charting platform where it was costing you $200, $300, $400 a month. And the information there wasn't half as advanced as to what we give you. So should you decide to go on, it's going to be less than $100 a month, $97, and you get all these features plus more. So there's a lot of great ways to get your trading back on track. And remember, there's no obligation. You decide to cancel if you want after 30 days. It's up to you, okay? Okay, in closing now, I don't want to take too much of your Saturday morning. I just want to say, do you see how simple it is to get in sync with the overall trend? It's not something that has to be complicated or some indicator that you have to spend $2,000 for to see what to do or to listen in some chat room. You can make that decision right now. And you all have the capability with every platform or even online. There are some free charts online where you can apply a 50-period moving average. But wouldn't you like the beauty and the strength of the fluid feature right there on your screen showing you and automatically through visual aspect telling you whether to be long or short? It makes it so much easier, plus it really helps define that slope where all the high probability setups occur, either on a strong upward slope or a strong downward slope. It's all yours. Check it out for 30 days, and then you can decide whether you want to continue or not. But I'm almost can guarantee you that you will, because we've had so many people getting back to us from all over the world telling us how much it has helped their trading. So remember, contact Pro Trader Strategies. You can call them directly for more information, or simply go to the chat box on the far right-hand corner, click on that link, and you'll automatically be set up for $7, 30 days for only $7, okay? As we conclude, I want to say thank you so much for attending today. I wish you the best of luck, but mostly I look forward to all of you becoming students and members of our new PTS Primo Charting Platform. Thank you so much. I'll see you next time. Bye-bye.